is going to be me talking about digital Wall Street, baby. Yes, digital Wall Street. It's been a long time coming. I've been wanting to bring this to you guys because I knew that this would be something that stands out on the market. Give me
an alternative to an ETH ETF. They are playing a really important role in the ecosystem. In the short term, where fair value for Ethereum does not play into what ETH does short term. I mean, look at it. Last week it got to 3,300 on because there are folks who have liquidation levels, or they're doing pair trades, or people think Ethereum's a dead chain, so they're betting on another chain and trying to force levels of liquidation.
So what he's saying is basically stocks go up and down. People choose when to sell, which is liquidation, right? That's when they're basically taking their profits or they're selling all their stocks or majority of their stocks. Once people see people are selling, stocks going down, people are wondering why they're selling, what's going on, why is the price going down? Then some people join in, and that becomes panic selling. So that's what he's referring to here when he's talking about liquidation and selling going off in a dip in stock. So depending on what company you guys invest in, you don't want to panic and start selling. You don't want to panic and start selling. Like when the tariffs happened, some people were like, oh man, stocks are going down. I need to get out of here. I need to sell my stocks. Trump is a madman. Tariffs are coming. I'm out of here. No. Now stocks are on sale. If you believe in the market, because the market is in a renaissance right now. This is the technology renaissance. Forget crypto, the chips with NVIDIA, artificial intelligence. These companies are providing services worldwide right now. Many, many businesses are in development and they need to use these technologies. Now, you should invest in that because you know that there's going to be a use case, which means what? There's going to be a transfer of money. These companies are in need, so they're going to get paid for their products and their services. So companies that you should invest in that are highly in the tech space or highly rated in the tech space or highly relevant. NVIDIA, of course, is king. You have TSM. AMD is another chip maker. You have Micron. You have, and this is just me off the top of my head, you obviously want to invest in the S&P, which is the top stocks in the market. Americans. And if you're an American, you believe in America, you see where the companies are going, why wouldn't you? Then you have your riskier bets. You have SoundHound, that's a riskier play. But if you look at where things are going, you can see that SoundHound technology, which is voice AI, which is catering to fast food chains and restaurants. Companies like SoundHound are pretty relevant. And I think Amazon had a stake in SoundHound at one point. The concern with SoundHound is that, let's say NVIDIA decides to enter that market. Can they just take all of their customers? So I'm not sure how proprietary what SoundHound is doing or how, when you enter a market, there has to be something that separates you so you can maintain that, that audience or that customer. You got to be mindful of who your competitors are. And when you have bigger players, they can come and decide to wipe you out depending on your niche or depending on the lane that you're in. So you hope that either your service is exceptional, your product is exceptional, or they can't replicate what you're doing. So that's something that you should be mindful of. But SoundHound stock is up pretty significantly. Let's look at it. See what they're up. We're talking money right now. SoundHound's currently at $15. Past month, it's up 41%. Past 3 months, 64%. It's actually down year to date. 1 year, it's up 221%. So that's not nothing that normal. That's 221%. When people used to say the S&P or a good return was what, 8 to 10%. That's what people were trying to get. So if you got a stock that has 221%, you should probably pay attention. And this is something that I've spoke about before in my past videos and my past content. Now I'm just gonna, hone that stuff in and put it on my Digital Wall Street channel and on BILLINICO so that we can, expand that conversation and we could get into the money more. MicroStrategy, that's MSTR, that's their sticker, and they are what BitMine is to Ethereum. That's what they are to Bitcoin. They are the Treasury, or a Treasury company, one of many Treasury companies, or a few that purchases Bitcoin. So they have a 200% return the past year. So they have outperformed Bitcoin the past year as a Treasury company. Now, if we want to look for patterns, we can say, well, if Bitcoin had a return of 100% the past year, MicroStrategy had a return of 200% the past year. Possibly now there's more risk, of course, but if Ethereum had a 60 something percent return, who's to say that BitMine won't have like 120% return? And if you invest your money, that's a good return on your money, right? So far, BitMine it's only been relevant stock information from June, so that's about 3 months, and it's up 727% since it's gone to market. That's crazy. So if we had bought it at $4 when it was open in June, it ran all the way up to 135. It ran all the way up to 135. Hold on, let's do a little research. Oh wow. So there you go. There you have it. So it's worth looking into. It's worth participating in, and it's worth giving it some thought. So let's look at Tom Lee and what he says.
But wasn't that Bitcoin at $1,000 in 2017? Like, actually, if people go back to 2017, because I think Ethereum is having its Bitcoin 2017 moment this year, where Wall Street is finally getting behind ETH. Bitcoin was 1,000 in the early part of 2017, and it was until August, and then it went straight up.
Like, what is resonant about Ether, the asset, and the Treasury company model over something like Bitcoin or any other alternative Treasury company?
Well, first, I'm a big fan of Bitcoin. I think Bitcoin is the way, and our work on the Fundstrat side shows Bitcoin can get to the million and a half dollar per coin. So Bitcoin still has a huge story ahead. Yeah, but Bitcoin and Ethereum operate on different parts of how the world is financializing. And that's a principal difference to me, because Ethereum represents the world financializing onto the blockchain, which is not Bitcoin's goal, and the AI world, creating basically a digitally native way to bridge the real world.
All right. So what he is talking about is the financial institutions utilizing Ethereum. He's talking about how the things that are going on, right, politically as well. You have the Genius Act passing, financial institutions such as Chase allowing stable coins to be um, considered in their market and their business practices. And then you have also Trump recently allowing stable coins to be a part of 401ks, which is big. So, but was JP Morgan, Fidelity, Goldman Sachs already offer ETH custody or execution for clients. Obviously, we have the crypto exchanges with institutional desks, serve hedge funds, family offices, and banks. So let's get into some specifics. Ethereum as an infrastructure, JP Morgan built its Onyx blockchain on a permissioned fork of Ethereum for interbank payments and settlements. So the technology has some real life use cases, and these banks are worth billions of dollars. So if they are investing into this technology, it means something. A $700 billion or $800 billion company is taking the time to invest in these things. You got to pause. You got to go, wait a minute. Wait a minute, this means something. So the more as time goes on, more banks are going to use these technologies. They're going to purchase tokens and the coins that you need in order to make these transactions on this proof of stake system. Doing some reading. All right, so some of the drivers for wider adoption. Hold on.
And digital security. So that's to me why someone wants to own Ethereum treasuries, because I would buy MicroStrategy if I was looking at this. And by the way, it is a granny shot in the Fundstrat ETF. But the reason is that MicroStrategy is growing your Bitcoin holdings every day. So you're going to outperform Bitcoin. Ethereum treasuries.
And that's something, once I understood that, it's like it clicked. So they are buying. So you can join in with them. Their stock price is where it's at. It's not that high right now. BitMine is it's new. It went from $4 to $135. Crazy. Now it's back in like the 50 something, 58. It's volatile. I get it. But you got to think long term. Crypto is going to go up most likely. Look at where Bitcoin is at. Bitcoin is considered the gold of crypto. Ethereum is considered the silver of crypto, right? So if Ethereum's already, it's like people are looking at the price of Bitcoin, right? It's like, wow, it's like 100 and something thousand. That's a lot. I can't buy all that Bitcoin to keep up. I'm out of the game. Well, MicroStrategy is only worth X amount of dollars, and they buy Bitcoin, and they already own a lot of Bitcoin. So essentially, you're buying into them so you can get access to all the Bitcoin that they have. So instead of dealing with all that volatility, having to deal with trying to buy into it, you can attach to that company. And yes, you're not going to have custody of the Bitcoin in that crypto to use in those transactions, but you have a stake in the value by owning. You'll have equity because you'll own the stock that has a treasury that owns it. Now, you can't control what they do with their stake. You don't control that. So if they want to get rid of it, then without informing you, they can do that. This is, or maybe I'm not sure exactly what the laws and rules and regulations are with that, but you get access. So Ethereum right now is worth 4,200. People are like, dang, I want Ethereum. I think Ethereum itself is going to go up. I believe in Ethereum itself. But if you buy BitMine right now, which is the MicroStrategy, it's considered the MicroStrategy to Bitcoin. It is a treasury company that holds Ethereum. And they have all these big time players. Peter Thiel, Kathy Wood. Who else was it? They have heavy. They got whales coming into their portfolio. Why? Because they have a lot of Ethereum and they can pool their money together and buy more. And they know public investors are going to want to pull in there as well. And that way we can all buy Ethereum together. The big boys are leveraging a great idea to buy and hold Ethereum and to also raise their treasury company's value by just owning the asset itself, by attracting more money from other investors and the public investors. And because of the value of Ethereum is still in the beginning stages, this is an opportune time. And Ethereum is really being used and really adopted by companies. I just said JP Morgan Chase, the EU, right? Think of Ethereum like the internet, right? But it's for money and contracts. You know, on the regular internet, we send emails, we watch videos. And that's why they say Web3. Web3, this is the evolution of the internet. This is another layer of the internet, but it's with transactions, things that we don't necessarily see with ourselves, but this is being worked on. And on Ethereum, they can send money, set up deals, trade stuff, no middleman. No middleman. Hold on. So you got banks like JP Morgan, Goldman Sachs, BNY Mellon already working with Ethereum. JP Morgan built its own private version of Ethereum to move money between banks faster. European banks have used Ethereum to sell bonds. That's like a loan, but for governments and companies, right? So this is something you got to consider. You got to get into.
Are really the only way for US equity investor to get exposure to Ethereum unless they're buying ETH directly or an ETH ETF. But if you're an institution and this is one of the biggest themes, I don't think they're going to just say, well, in my fund, my $50 billion large cap fund, Ethereum's the biggest trade, so I'll buy JP Morgan. They might, but they're better off saying, how can I be directly exposed to Ethereum? And they can't really buy an Ethereum ETF because that's not within the parameters of their fund. So I think, to me, the US equity market professional investor looks at Ethereum treasuries as really the only way to get exposure to ETH as a macro trade.
MicroStrategy currently holds about.
So he said what I just said and just a little more complicated. It's a way for you, smaller players, to get exposed to the crypto, such as Ethereum, on a larger scale, because now you own a piece of something that owns a lot of something. Instead of you trying to buy little pieces of something by yourself, you can still buy little pieces of Ethereum by yourself. You can buy pieces of all these cryptos, Bitcoin and Ethereum, the most popular, XRP, Cardano. But if you can buy a piece of a treasury company that owns a lot more of those coins, now you have more exposure. So when those coins go up, the pieces that you managed to get yourself, you might even have more than a piece. You might have coins, actually whole coins. You have that access, but the mining company, depending on how much of the equity you bought in the mining company, they're exposed to 100x, 50,000x what you're exposed to, million X. They're just exposed to way more. So when those coins go up, now you have even more returns on your end. So you get the benefit more. But when it goes down, those treasury companies lose even more value because they're holding a lot. and their only use case is holding the equity or holding that asset.
3.2% of Bitcoin's circulating supply and aims to own around 5%, equivalent to 1 million Bitcoins. Reaching this level would give them a sovereign put, meaning they become strategically important within the Bitcoin ecosystem, making large acquisitions by others harder without affecting the market.
So when you're a treasury company and you own 5%, your value goes up because you influence the ebbs and flows, right? So if someone sells or other whales try to come in and just cash out and just make the market go down. If you hold, people see that you believe in the company as the treasury company, and you still see it as a valuable asset long term, which then convinces or influences other people in the market to hold and to continue to invest. So 5%, even though it seems like a little, when one entity holds 5%, it's powerful. And when other people, such as ourselves, little men, soon to be big men, or depending on what your goals are, sharks, other whales, you join in. Now you get to hold your foot. But then again, you have to be careful because you are not a part of that board. So you don't know what their exit plan is, if there is an exit plan. So this is something to be mindful of. There's pros and there's cons.
MicroStrategy grew its Bitcoin by
I would invest something personally. I would invest in Ethereum and BitMine. I would dollar cost average, wait for a dip or a drawback, and get in there. Definitely BitMine right now. I would buy BitMine right now more than Ethereum. I would dollar cost average into Ethereum. If Ethereum gets a drawback, I would definitely buy some. BitMine I would purchase right now, no matter where it's at. Unless it's at its highest, but it's not at its highest right now. I would buy BitMine right now, and then I would buy it weekly.